Hello and welcome to our April 2022 webinar. My name is Lisa Judge and I am the Manager of Member Advice and Education here at Active Super. We are so happy to have you join us, and before we commence, I would like to respectfully acknowledge the traditional custodians of the lands we work, live and come together on. We acknowledge their unique ability to care for the country and deep spiritual connection to it. We honour elders past, present and emerging, whose knowledge and wisdom has and will ensure the continuation of cultures, communities and traditional practices. The title of today's webinar is Federal Budget Bingo. Now, if you do have a burning question as a result of today's webinar, please feel free to email us at hello@activesuper.com.au. We have added a link to the Active Super Financial Services Guide with this presentation. The Financial Services Guide, or FSG, is an important document that explains what you can expect to receive from our service, the types of advice, our privacy policy, complaints procedure, and how you can contact us. It lets you know we're all authorised and qualified, and it contains a lot of other valuable information. The federal election has now been announced, and just before that happened, we had the federal budget. Today, we will look back at the budget, the changes made to super, and other relevant information in relation to financial matters. We'll then discuss the changes happening with super from this July, and some of those relate back to what was announced in last year's budget, that the items that have now passed legislation. And we'll also go through some other benefits for Active Super members. What I do need to let you know is the information in this presentation is general information only and does not take into account your personal objectives, financial situation or needs. Accordingly, you should consider these matters, refer to the relevant product disclosure statement and target market determination available at activesuper.com.au before making any decisions. This is issued by LGSS Proprietary Limited as trustee for local government super, trading as Active Super. So, what were the highlights? Let's have a quick recap of this year's budget. In relation to super, there were no changes that directly related to Active Super, particularly accumulation members. If you're and your membership as such. If you're an account-based pension member, however, the government did announce an extension to the 50% drop to the minimum pension for the 2022-23 financial year. So what this means in plain English is, for instance, if you're 65 years of age, as at the 1st of July this year, your minimum pension that you have to take would ordinarily be 5% for the 22-23 financial year. The government has extended the reduction, so that means you only have to take, you can take a higher pension if you want to, but you only have to take a minimum pension of 2.5% for the 22-23 financial year. And the minimum pensions, I just gave one example, minimum pensions do depend on your age. There were some other financial benefits that came out of the budget to assist individuals in the short term, particularly with the cost of living. So this includes a reduction to the fuel excise, designed to reduce the cost of petrol for the next 6 months. The government also announced a $250 one-off payment to 6 million pension and welfare recipients and a one-off bonus $420 tax rebate. And so that's what I've highlighted there to low and middle income earners for this financial year. The next big change that's happening from this July is that Super Guarantee, or SG, is increasing from 10% to 10.5%. So that's actually been in legislation for some time as the increase from July this year. But what we've done is we've given a little bit of an example of what difference that could make to an individual over the long term. So the example we've provided is based on a person earning $50,000 per annum. That means it would be an extra $250 per annum into super. We've also included for that individual this one-off $420 tax rebate for this year, and multiplied that by the magic of compound interest at 5% over 20 years, and that adds up to an additional $13,354. So as I said, we've used different assumptions to get to that figure, and it is important to note that past financial performance is not a reliable indicator of future performance. We've used the Money Smart compound interest calculator for that calculation, which is a calculator available to all on the Money Smart website. So what are the other changes happening from July? So as I mentioned before, there are some potential windfalls that came about from last year's budget that have now passed legislation. Firstly, for those working casual hours or part-time, for instance, super contributions will be paid regardless of whether or not you've earned $450 a month minimum, whether you've earned that or not. So that 10.5% super guarantee will be paid on your income even if you earn the less than $450 in the month. Even if this does not impact you, this may benefit your spouse, your children, or even your grandchildren, and it will benefit their financial future as a result. For those saving for a deposit for their first home, there's an increase to the tax-friendly First Home Saver Super Scheme. Home Super Saver Scheme, allowing individuals to save up to $50,000. So this is a great incentive for those who are trying to enter the property market. You can make additional contributions to your super from pre-income tax, which means it will be taxed at a reduced rate of 15%. That's the amount that super contributions are taxed at pre-tax. This then reduces your overall taxable income, which can help when it comes to end of financial year. When you're ready to make the big purchase, you can withdraw up to a total of $50,000 of the voluntary contributions you've made. But you can only apply for the $15,000 per financial year, and there are other stipulations in regard to residency after the purchase, for example, so it's always best to check the fine print, of course. For those closer to retirement age who decide to downsize their property, the eligibility age has dropped from 65 to 60, and there's no end age on that. So it's really interesting as an opportunity for some people to downsize and be able to add money to super that they otherwise wouldn't have had the opportunity to do. So this could provide a boost in retirement savings for those who are planning to downsize. For those 67 to 74, there will be no work test requirement from July 2022. So this could provide an avenue for some members to make additional contributions to super, or potentially even minimise potential tax to their estate. The next one is the bring forward rule. So essentially, the bring forward rule means that if you make contributions above the annual non-concessional contributions cap, so that's the post-tax or after-tax contributions, there's a cap on those that you can make each year, but you may be able to contribute future year caps. It allows you to make those additional non-concessional contributions in that same financial year without having to pay extra tax. Currently, you have to be under 67 to be eligible to utilise the bring forward rule. From July this year, that will increase to under 75 years of age. There is additional eligibility criteria that apply. So it's important to chat to us at Active Super to obtain that information, or the ATO website to find out more. There are some other potential windfalls for our members. So if you head over to activesuper.com.au/rewards, you will see that there are some Active Super rewards available to our members. So there are incentives like Go Get, car sharing, koala mattresses, Trippers White restaurants, bars and cafes. So it's an additional way we are actively rewarding our members. And stay tuned, because there are some more rewards coming soon. So it's a good idea to keep looking at that website. So look, that is all we have time for today. If you do have any questions, please feel free to contact us via the methods on this slide. So you'll see that there's a 1300 number there via phone, so 1300 547 873, or drop us a line at hello@activesuper.com.au, or head over to our website where web chat is available during business hours, Monday to Friday. Thank you for listening.